Why Canadian retirees should rethink life insurance for legacy and wealth preservation. You've worked your entire life to build something worth leaving behind. But what if a large chunk of it disappears to taxes when you're gone? Most Canadians think life insurance is only for the young, but it can be one of the most powerful estate planning tools for retirees. Whether you want to leave a tax-free legacy, cover estate taxes, or simply spend your retirement savings confidently, the right life insurance strategy can make all the difference. Hi, I'm Laurent Munier, partner and financial advisor at Safe Pacific Financial. If you're new here, welcome. And if you've been with us before, welcome back. At Safe Pacific, we specialize in helping Canadian business owners, families, and retirees grow, protect, and transfer their wealth using advanced yet easy-to-understand financial strategies. If you want to talk to us, it's through our website, safepacific.com, and you can send us a message from there through the contact form. Why most Canadian retirees overlook life insurance? Well, for many Canadians nearing or in retirement, life insurance often feels like a thing of the past. It's something they needed in their 30s or 40s to protect their mortgage, their children's education, or their spouse's ability to maintain the lifestyle if something were to happen. And while that's exactly what term insurance is designed for, it's not the whole story. In fact, dismissing life insurance after retirement could be one of the biggest financial planning mistakes that retirees make. Here's the thing. Life insurance isn't just about replacing lost income or covering short-term liabilities. When structured properly, certain types of life insurance, and especially permanent life insurance like whole life or universal life, can serve as one of the most valuable and tax-efficient tools for managing your wealth and your legacy during retirement. If you're retired or preparing for retirement, ask yourself, do you want to leave a tax-free inheritance for your children or grandchildren? Are you concerned about capital gains taxes on your cottage or in rental properties or your investment accounts? Would you like to make a charitable donation without reducing your personal wealth? Do you want to protect your family from probate delays and unnecessary legal battles? Now, if you answered yes to any of the above, then permanent life insurance could be a key pillar in your estate plan. Unlike term insurance, which expires and is unlikely to pay out if you outlive the term, permanent life insurance covers you for life, ensuring that your beneficiaries receive a guaranteed, tax-free payout no matter when you pass away. Now here's why Canadian retirees shouldn't dismiss permanent life insurance. We often hear from retirees, the kids are grown, the house is paid off, I don't have any debt. Why would I pay premiums for life insurance now? And it's a fair question, but it's also based on a limited understanding of what permanent life insurance can do. So here's what retirees often overlook. It allows you to spend your retirement savings confidently, knowing that your estate will be funded by the life insurance death benefit. This gives you the freedom to enjoy your retirement income fully, without hoarding some savings just so you can leave something behind. It simplifies intergenerational wealth transfer. The death benefit from a permanent life insurance policy bypasses probate, avoids legal delays, and cannot be contested like a will. It provides your loved ones with immediate tax-free capital, helping them to cover estate taxes, settle your affairs, or simply to enjoy the legacy that you intended. It also creates a built-in solution for tax obligations on death. So retirees with non-registered investments or even RRSPs or vacation properties or private shares could face a substantial tax bill on death. And a whole life policy can offset or eliminate that burden so that your heirs don't have to sell assets to pay the CRA. Now let's talk about term life insurance versus permanent life insurance in Canada, and what do you need to know? So I've been talking about permanent life insurance, but when it comes to life insurance in Canada, most people are more familiar with term life insurance. It's affordable, it's simple, it's designed to provide financial protection during the years when you have the most financial responsibility, like raising a family or paying off a mortgage or building a business. Term life insurance policies offer coverage for a fixed period, typically 10 years or 20 years or 30 years. Or even until a specific age, like a term to age 65. During that term, your premiums are fixed. And if you pass away in that window, your beneficiaries would receive a tax-free death benefit. And according to the Canadian Life and Health Insurance Association, term life insurance accounts for nearly 75% of policies sold across the country. But here's the challenge. Term insurance is temporary. It's not designed for long-term estate planning. Once the term ends, or once you reach your 70s or your 80s, it often becomes too expensive to renew, or the policy simply expires without any value. And then that's why many Canadians nearing retirement start to shift their attention to permanent life insurance. So why permanent life insurance makes more sense in retirement? So as you transition into retirement, your financial goals will evolve. You may no longer need to replace your income, but you may want to. You may want to leave a tax-free legacy to your heirs. You may want to cover capital gains taxes on real estate or investment properties. You may want to ensure equal estate distribution in a blended family. You may want to make charitable donations through the estate. You might want to provide financial support for a lifelong dependent. Permanent life insurance is specifically designed for these goals. Unlike term insurance, permanent policies provide coverage for life, not just for a limited number of years. They also offer significant tax advantages. They offer estate planning benefits, and in some cases, they offer access to cash values, which you can use while you're still alive. There are different types of permanent insurance for retirees in Canada, and there's 3 main types of permanent insurance that are available. Each has different features depending on your goals, your risk tolerance, and whether you want to build cash value or simply guarantee a tax-free payout to your beneficiaries. Whole life insurance. Whole life insurance is widely considered the most stable and reliable form of permanent coverage. It provides guaranteed premiums that never increase, no matter how old you are or your health. It provides a guaranteed death benefit paid tax-free to your beneficiaries, and it provides tax-deferred cash value growth inside the policy. Also, it provides access to annual dividends if the policy is a participating policy. So here at Safe Pacific, we typically recommend whole life insurance to retirees because it combines long-term coverage with powerful wealth-building potential. And the cash value component can be used later in life to borrow against for emergencies, or for investment opportunities, or to supplement your retirement income without interrupting your overall estate plan. Whole life is ideal for retirees who want predictable results. They want low risk and they want legacy protection in one package. Universal life insurance, well, that offers similar lifetime coverage, but with more flexibility and customization. With this type of policy, you could adjust your premium payments. You could choose your own investment options inside the policy. You can customize the death benefit structure. And this added control can be appealing to investors or retirees who are financially savvy and want to take an active role in managing the policy. However, universal life carries more market risk than whole life, and the investment performance will impact the policy's long-term value. So for retirees with a higher risk tolerance, universal life may be suitable, especially when used as part of a diversified retirement or estate strategy. You can also get a term to 100 life insurance policy. And this is a unique type of permanent life insurance that's designed for those who want affordable lifelong protection without any bells and whistles. Here's how it works. So the coverage lasts until your age 100. The premiums are fixed and they're typically lower than the other permanent types of policies. There's no cash value or investment component, and the death benefit is paid out tax-free on death, just like the other ones. Because it's simple and cost-effective, Term 100 is a popular choice for legacy-focused retirees who want to guarantee their beneficiaries receive a tax-free payout without the need to manage investments or to build up a cash value. It's basically a no-frills permanent policy, ideal for those who want straightforward, guaranteed protection for estate planning purposes. What are some of the benefits for permanent life insurance policy for retirees in Canada? Well, for many Canadians entering retirement, permanent life insurance offers far more than just a safety net. When you choose a whole life insurance or universal life insurance or a Term 100, these policies come with long-term advantages that are particularly valuable during retirement years. In fact, Permanent life insurance is one of the most effective tools for legacy planning, for tax minimization, and for wealth transfer in Canada. Now let's explore the key benefits that make it a smart addition to any retiree's financial plan. Number 1, you get a tax-free death benefit that bypasses probate and the delays. So one of the primary advantages of permanent life insurance is the guaranteed tax-free death benefit. When you pass away, your beneficiaries, whether they're your children, your spouse, or a charitable organization, receive a lump sum payout that's completely exempt from income tax. Unlike assets that are distributed through the will, the life insurance benefit also bypasses probate, avoiding costly probate fees. It's also not delayed by the court, so it ensures faster access to funds. And the life insurance payout cannot be contested, which provides clarity and peace of mind to your loved ones. So this means that permanent life insurance provides speed, provides certainty, and tax efficiency, which is a rare combination in the estate planning world. Number 2, it provides you freedom to enjoy your retirement savings without guilt. So many retirees find themselves in a, saving just in case. They're reluctant to spend their hard-earned RRSPs or their pension or their TFSA because they want to leave something behind. But this often leads to an overly conservative lifestyle in retirement. With permanent life insurance, you can spend your retirement income freely because the legacy that you want to leave behind is already secure. So this approach gives you more financial confidence during retirement. Also gives you the ability to enjoy your wealth while you're alive, and a guaranteed estate payout regardless of how much you spend while you're alive. So this is one of the most liberating aspects of permanent life insurance. You can enjoy life now without sacrificing your long-term legacy goals. Number 3, you can offset capital gains and estate taxes efficiently. So do you own a vacation home or an investment properties or a non-registered investment portfolio? Well, when you pass away, your estate could face substantial capital gains taxes, sometimes 6 or 7 figures. And then this tax burden could force your heirs to sell a beloved family property or to liquidate investments just to pay the CRA. Permanent life insurance policy solves this problem by providing a liquid, tax-free source of funds that could be used to cover the capital gains taxes. It could pay outstanding estate-related debt. It could preserve family-owned assets that you want to keep, especially real estate. So in short, life insurance can help your family keep what you worked so hard to build without needing to sell or sacrifice anything. And 4, it could leave a meaningful legacy for future generations. So whether your goal is to provide for your grandchildren or support your adult children or to donate to a charity, well, that's where permanent life insurance comes into play. It offers a clear, tax-efficient way to transfer wealth to the next generation. The benefits of using life insurance for legacy planning include the guaranteed payout to individuals or to the causes that you care about the most. There's no need to adjust your will, since the named beneficiaries on the insurance policy will receive the funds directly. And it gives you the ability to equalize inheritances, especially in a blended family or when certain heirs are more involved in a family business. This makes permanent insurance a valuable part of intergenerational wealth planning, and it ensures your value lives on well after you're gone. Now we hear, but isn't permanent life insurance expensive? Well, it's true that permanent life insurance premiums are higher than term insurance, especially if you're starting a policy in your 60s or 70s, but the value it provides often far outweighs the cost, and here's why. You're securing a tax-free benefit that could save your heirs hundreds of thousands of dollars in taxes. The policy never expires as long as those premiums are paid. And it creates financial certainty in an otherwise unpredictable estate process. So in fact, when you're comparing it to traditional investments, many of which are subject to tax, or market volatility, or probate, the permanent life insurance often delivers a superior after-tax return for estate purposes. So at Safe Pacific, we work closely with you to design a policy that aligns with your goals, aligns with your health, and aligns with your budget, so that you get the maximum value for every premium dollar. If you already have term insurance, well, here's why you should consider converting it. And if you're a Canadian retiree or you're approaching retirement age and you currently have this term life insurance policy, there may be strategic opportunity available to you, which is converting your term policy to a permanent policy. Many Canadian insurers include a term to permanent conversion option in their contracts. This allows policyholders to upgrade their coverage without new medical exams or without underwriting. So this means you can lock in lifetime coverage based on the health status that you had when you first bought the term policy, which is a major advantage if your health has changed over time. So the key benefits to converting term to a whole life is, no medical questions or exams required. You could preserve your original health rating. You can secure permanent lifelong coverage. You can also use the policy for estate planning and tax efficiency. So the conversion window is usually limited. It typically ranges from the first 5 or 10 years of the term policy or until you reach a certain age, like maybe 70 years old or 75 years old. If you miss the window, you could lose the opportunity to convert entirely, and you could be subject to full underwriting if you want to apply for permanent coverage later. At Safe Pacific, we help clients review their existing term insurance policies, and we walk them through the conversion process so that you don't miss out on this important financial planning opportunity. Now, with whole life insurance, you can build a tax advantage cash value in retirement. One of the most powerful benefits of the whole life insurance for Canadians is the ability to accumulate a guaranteed cash value over time. Unlike term insurance, which expires and offers no living benefit, whole life policies provide both a death benefit and a growing tax-deferred savings component. So here's how cash value life insurance can work for you in retirement. It lets you access liquidity without selling investments. So you could borrow against your policy's cash values tax-free, which gives you access to capital for emergency expenses or medical or long-term care costs, family needs or education funding, home improvements, retirement, travel. It lets you supplement your retirement income. So if you're looking to diversify your retirement income sources, a properly structured whole life policy can be used to generate tax-efficient cash flow, especially in years where markets are down and you don't want to sell other assets at a loss. You could also leverage for investment or for real estate opportunities. So many high net worth Canadians use policy loans to invest in real estate or private businesses or market opportunities, all while their policy continues to grow in the background through the dividends and compounding. This makes whole life insurance more than just an estate tool. It becomes a living financial asset that enhances your flexibility and your financial independence throughout retirement. Now, you want to work with a trusted life insurance advisor in Canada, and making this shift from term insurance to permanent insurance or designing a policy from scratch requires more than just filling out a few forms. You want to make sure your coverage aligns with your retirement lifestyle goals, your estate planning and your legacy objectives, and your desire to minimize taxes and to maximize flexibility. So here at Safe Pacific, we specialize in building whole life insurance strategies for Canadian retirees and business owners who want to protect their family, who want to leave a meaningful legacy, who want to create a tax-free wealth transfer strategy, or who want to supplement their retirement income with confidence. You could also use your cash value life insurance to gain more financial control. So we work closely with each client to ensure that your life insurance policy isn't just a product, it's a cornerstone of your long-term financial plan. Now, what are next steps? So if you're already retired or you're approaching retirement and you want to explore how a whole life insurance policy can help you to leave a tax-free legacy or cover your estate taxes or even access funds now while you're still alive, contact us. So visit safepacific.com and there's a contact form on there. Those emails come to me and somebody on the team will get back to you within 24 hours on business days and we can schedule a consultation. We're licensed all across Canada and we do all our meetings via Zoom, so we can meet with you anywhere in the country. Now, if you got some value from today, please tell the robots and the algorithm that you really like this video. And the way that you do that is you click like, you could leave a comment if you've got a question, or hit the subscribe button so that you don't miss any of the future videos. We put out these videos every week here on YouTube and on all the other social platforms and on our website. So that's your next step. Go to the website, safepacific.com, fill out the form, that'll come to me and we'll set up a time to meet and see if a strategy like this could be right for you. That's it for today. Thanks for watching, and I will see you next time.